The Essays of Warren Buffett, Lessons for Corporate America is a collection of writings and letters by Warren Buffett, one of the most successful investors in history. The book covers a range of topics related to investing, corporate governance, and business strategy, and is aimed at providing insights and lessons for executives, investors, and students of business. The essays in the book were selected and compiled by Lawrence Cunningham, a professor of law and business at George Washington University, and are organized thematically to provide a comprehensive and practical guide to Buffett's investment philosophy and approach to management. The book has been praised for its clarity and accessibility, as well as its practical and actionable advice for anyone interested in the world of finance and business. Here are some key takeaways from the Essays of Warren Buffett, Lessons for Corporate America. Focus on intrinsic value. Buffett believes in investing in companies that have strong intrinsic value, which means focusing on their long-term earnings potential rather than short-term market fluctuations. Invest in what you understand. Buffett stresses the importance of investing in businesses that you understand and can predict the future prospects of, rather than getting caught up in the hype around trendy industries or products. Think like a business owner. Buffett encourages investors to think like a business owner, focusing on the long-term success and sustainability of the company rather than just short-term gains. Maintain a margin of safety. Buffett stresses the importance of maintaining a margin of safety when investing, which means buying stocks at a price that is significantly below their intrinsic value in order to minimize downside risk. Avoid excessive fees and speculation. Buffett cautions against excessive trading and speculation, and advises investors to avoid paying high fees for professional investment management that may not necessarily lead to better returns. Align incentives with shareholders. Buffett believes that companies should align the incentives of their executives and employees with those of their shareholders, in order to ensure that everyone is working towards the same long-term goals. Be patient and disciplined. Finally, Buffett emphasizes the importance of patience and discipline when investing, and advises against making impulsive decisions or trying to time the market. Instead, he encourages investors to focus on building a diversified portfolio of strong, well-managed companies and holding on to them for the long term. Don't underestimate the power of a company's competitive advantage. Buffett emphasizes the importance of investing in companies that have a strong competitive advantage in their industry, as this can be a key factor in determining their long-term success. Look for companies with strong management teams. Buffett believes that a company's management team is a crucial factor in determining its success, and encourages investors to look for companies with experienced, honest, and capable leaders. Understand the value of dividends. Buffett is a strong proponent of investing in companies that pay regular dividends, as this can provide a steady source of income for investors and also indicates that the company is financially healthy and has strong long-term prospects. Take a contrarian approach. Buffett often looks for investment opportunities in companies or industries that are out of favor with the market or have been overlooked by other investors. This contrarian approach can sometimes lead to big rewards for patient and disciplined investors. Keep things simple. Buffett is known for his straightforward and simple approach to investing, and encourages investors to avoid getting bogged down in complicated financial models or investment strategies. Instead, he advises focusing on the basics of a company's financial performance and long-term prospects. Be aware of your own limitations. Finally, Buffett emphasizes the importance of being aware of your own limitations as an investor, and avoiding investments or strategies that are outside of your own area of expertise or comfort zone. This can help minimize the risk of making impulsive or poorly informed decisions. Stay patient during market downturns. Buffett stresses the importance of staying patient and disciplined during market downturns, and encourages investors to view them as opportunities to buy high-quality stocks at discounted prices. Be wary of excessive debt. Buffett cautions against investing in companies with excessive levels of debt, as this can increase their financial risk and reduce their long-term prospects. Avoid herd mentality. Buffett advises investors to avoid the herd mentality that can often dominate the stock market, and instead to focus on their own independent analysis and research in order to make informed investment decisions. Embrace your mistakes. Buffett acknowledges that all investors will make mistakes at some point, and encourages investors to embrace their mistakes and learn from them in order to improve their investment strategies over time. Don't get caught up in short-term market noise. Buffett advises investors to ignore the short-term noise and fluctuations of the stock market, and instead to focus on the long-term fundamentals of the companies they are investing in. Stay within your circle of competence. Finally, Buffett encourages investors to stay within their own circle of competence, and only invest in businesses or industries that they fully understand and have a strong level of knowledge and expertise in. This can help minimize risk and increase the likelihood of long-term success. Understand the importance of moats. Buffett emphasizes the importance of investing in companies that have a strong economic moat or competitive advantage, as this can help them maintain their profitability and market share over the long term. Don't overlook the power of compounding. Buffett is a strong advocate of the power of compounding, and encourages investors to look for companies that can generate long-term returns that will compound over time. Be mindful of taxes. Buffett advises investors to be mindful of the tax implications of their investment decisions, and to seek out strategies that can help minimize taxes and maximize after-tax returns. Take a long-term perspective. Buffett stresses the importance of taking a long-term perspective when investing, and encourages investors to avoid being overly influenced by short-term market fluctuations or trends. Don't be swayed by market predictions. Buffett cautions against relying too heavily on market predictions or forecasts, and instead encourages investors to focus on the long-term fundamentals of the companies they are investing in. Be disciplined and consistent. Finally, Buffett emphasizes the importance of being disciplined and consistent in your investment approach, and avoiding the temptation to make impulsive or emotionally driven decisions that can undermine long-term success. Here are 10 of the best quotes from the Essays of Warren Buffett, Lessons for Corporate America. The stock market is a no-call-strike game. You don't have to swing at everything, you can wait for your pitch. The best thing that happens to us is when a great company gets into temporary trouble. We want to buy them when they're on the operating table. Our favorite holding period is forever. Price is what you pay. Value is what you get. It is not necessary to do extraordinary things to get extraordinary results. In the business world, the rearview mirror is always clearer than the windshield. The most important quality for an investor is temperament, not intellect. Risk comes from not knowing what you're doing. You only have to do a very few things right in your life so long as you don't do too many things wrong. Our approach is very much profiting from lack of change rather than from change. With Wrigley chewing gum, it's the lack of change that appeals to me. In conclusion, the Essays of Warren Buffett, Lessons for Corporate America provides a wealth of knowledge and insight into the mind and investment philosophy of one of the world's most successful investors. The book is full of valuable lessons and takeaways, including the importance of investing in high-quality companies with strong economic moats, the benefits of taking a long-term perspective, and the dangers of being swayed by short-term market fluctuations and noise. Buffett's quotes and personal anecdotes provide further insight into his investment strategies and philosophies, and demonstrate the importance of remaining disciplined, consistent, and patient in pursuit of long-term success. Overall, this book is a must-read for investors of all levels, as it offers a wealth of practical advice and wisdom that can help anyone seeking to improve their investment strategies and maximize their long-term returns.